We also had some news this week that another big asset manager has filed for an Ethereum ETF. And this is Franklin Templeton, who we've talked about. They had the laser eyes on Twitter a couple of weeks ago. They already have a Bitcoin spot ETF. They have now launched or applied for an Ethereum spot ETF. And interestingly, and I talked about this on the roll-up last week, their application has the ability to stake the underlying ETH. This was not something, I mean, of course, it's something we want to happen to be really cool, but it wasn't something we were expecting because it just doesn't seem like Gary Gensler is going to allow that to happen. But now we have ARK and we have Franklin Templeton, who has applied with the staking. Now, maybe that gets taken out. We still got a ways to go until the May 23rd date, but this would be pretty crazy if it happens. Now, the thing we're looking for is, does BlackRock amend their ETH ETF and put in the staking part to it? If they do, that's extremely bullish and probably a good chance that it happens. But until BlackRock does it, I would say it's a bit of a rumor at the moment. So still, time will tell on what happens with those ETFs. But seeing the inflows coming from Bitcoin is really, I think, making people go, oh, well, what happens if the Ethereum ETF gets approved? If we had $500 million inflows per day from an ETF on Ethereum, which market cap is about $300 billion instead of the $950 billion that Bitcoin is, Ethereum would be going up 10, 20% a day right now. It would be absolutely nuts. Now, will Ethereum get those same size of inflows as Bitcoin? Probably not, but it'll get a certain percent of it. And again, we don't know what that will be until it launches. Let's see. But definitely a institutional-like asset, Ethereum, because it has yield to it. It's a sort of a platform you can build apps. It kind of makes sense to a lot of institutions, potentially more than Bitcoin does, but who knows? We'll see where things go. But it is definitely a big catalyst towards what's happening with ETH. And I think the reason that we're starting to see a little bit of sort of some bullishness in the ETH price versus Bitcoin is because of that. I'll pull up the ETH BTC chart here first. We can see, obviously, we've had the downtrend for a long time. We've talked all about that. When the ETF launched, Ethereum had just a massive jump upwards. And so it's done quite well. But Bitcoin has actually powered back over the last few weeks, as you can see here, coming back down to about 0.051 on the ETH BTC chart. Actually, even lower than that, 0.051. But just the last couple of days here, since really these inflows picked up with Bitcoin, all of a sudden Ethereum has really outperformed. And so part of that probably because of the Ethereum ETF application from Franklin Templeton and just overall a lot of bullish signals happening on Ethereum. One, Ethereum ETF news is starting to heat up. So I think that that's playing a big role. And then I also think we did a newsletter on this last week. So if you haven't seen, check it out. One, it's deflationary. We're burning about 0.2% of the supply of ETH per year right now. But the biggest news is that 25% of all ETH is staked now. And that's basically ETH that's not getting sold. It's not really on the circulating market to be sold. So that's really big. Restaking, which is Eigenlayer, we've talked a bunch about that, has just hit 5 billion TVL. So that's sucking up a bunch of ETH as well. And then we have the announcement of EIP 4844 going live now on March 13th, which should drive a lot of adoption to Ethereum L2s, which are also burning a bunch of ETH. So there's just a lot of reasons why ETH is just getting more and more scarce. And when you add the demand of an Ethereum ETF on top of that, it's just a very, very bullish setup. And I cannot stress that enough. So I've been talking about that quite a bit. Now, I did show this big ascending channel, I believe last week on Market Watch. I said if we don't break the 2770 mark, then I'm not overly excited just yet. We could tap off the top of that and come back down. So we're still in that range. So again, as I said, we might see some bullishness. We might see some bearishness. I wasn't sure last week. Ended up being a really good week, but ultimately, I don't think it's that big of a deal just yet. We'll see what happens. If this breaks through that channel, okay, I'm very bullish and it's on, but we've yet to do that. And in fact, when it looked like we might reach that, because it was pretty bullish yesterday, a lot of good price action happening yesterday, we woke up this morning and US CPI, which are the inflation numbers, were announced. And unfortunately, not so good. Well, I mean, it depends how you look at it. The good news is that inflation itself went from 3.4% last week to 3.1%, last month to 3.1% this month. So it went down 3%. That's pretty good. You can't complain with that. However, the markets didn't like it because the analysts, the experts out there that sort of, they analyze and they estimate what they think is going to happen is they thought it was going to go down to 2.9. So they call this inflation coming in hot. It wasn't as low as what the experts expected. Now, the weird thing to me is the experts get this wrong every single month. So why do we base our expectations on what the experts predict? Instead, let's just look and see that, whoa, inflation came down 3% month over month. That's pretty good, but that's not the way the world sees it. at least not markets anyway. So that's why we've seen a bit of a pullback here. They were hoping for inflation to go down even further. And then also core CPI remained at 3.9%. So no movement on the core CPI, although it was expected to be down to 3.7. So still continue to lag on the core side, which isn't the greatest. We don't want to see that, but that's the reason for the red in the markets on Tuesday, February 13th.